All right, what's going on, everybody? Welcome back to the channel. In this video, I want to review my trade on PayPal. Did fairly well, made about $700 this morning. And then we'll just go over the news about Wells Fargo canceling lines of credit. So without further ado, let's go ahead and get right into the chart. Okay, so I did pretty good taking this PayPal trade. Let me just show you what the daily chart looks like real quick. Daily chart, we had a little bit of consolidation last couple of days. Then yesterday, we kind of gapped down, but then we recovered, right? The entire market recovered very well. And so we did fill that sort of gap back between the opening price on Wednesday and the opening price on yesterday, on Thursday. We closed that gap. We had a nice bottoming tail. You can see the bottoming tail there, right, on the daily. So I knew the chances that we were going to have kind of a bullish move today were pretty high. We also had the markets recovering, right? The SPY, the NASDAQ, even the Dow, I think, all of these markets were recovering. When you look at the news, it says U.S. stocks are rising. The three main indexes rebounded. So, you're paying attention to all of this before you take the trade. Also, you had the VIX, and I'll just show you the VIX real quick. The VIX was going down. You can see we had a nice down day on the volatility index. So that being said, all right, let's look into the 1 minute, because I was trading pretty much off of the 1 minute on PayPal. We were above the closing price from yesterday, which meant we sort of opened with a gap. Now, the reason that's important is because, when there is even the slightest gap, it usually has to get filled. So we opened right about here, and immediately the gap got filled, right? But then it bounced right back up. And this is where I started entering my long position, because my hunch was, even though we had supply right here, right? We had a 1 hour supply zone at 296. If we didn't sell off completely and we just sort of consolidated, my hunch or my thesis was that the probability where we're going to move higher was going to be very, very likely. And that's exactly what happened. So I'll show you where I started scaling in. So I started scaling in on this candle. Now, there was an issue where I wasn't getting my limit orders filled. And, I was getting a little emotional about it because I'm like, well, I'm missing out on these prices down here. So I hit buy market on 4 contracts. And what does my broker do? What does Thinkorswim do? It fills me. The market was at about 250, right, on the contracts. It fills me at 305 or 300, I think. Let me see. All right, well, yeah, my filled order, yeah, you can see 300, all right? And that was 4 contracts. So, that was pretty messed up because the market was at 250 and it fills me at 300. So the price had to get up here before I could sell with profit. So, that's just my broker. It's Thinkorswim. It is free. Well, it's not really free because I'm paying options trading fees, but there's no commission. But there kind of is commission, which is the option trading fee. But I just have to know that, I can't use the market orders because, even the brokers are trying to screw you. Or at least that's the way it feels. But, I wasn't trying to be a victim about it. I was like, well, okay, let's just see what happens. We did get this little run here. And I was maybe about $20 or $30 on each contract in profit. But then we aggressively sold off. I didn't sell. We aggressively kind of sold off from that area. But again, we didn't completely sell off. We're near the 1 hour supply zone. And then it just starts consolidating, right? So I start entering. I get a few more on this green candle. I got a few more when I saw this candle form. And even though we didn't push up immediately, right, we're still kind of just squeezing. We're getting tighter and tighter and tighter. You can see my entries right here, right? We had at 932, 935, 935, 936, 939. All right. So I scale into position, and this is usually how I like trading, right? I scale into a position, just take one trade. My entries are usually never perfect, right? But it's very hard to time these things. It's very hard to time the exact bottom. And it's even harder to time the top, right? This is why you have to just take profit. you know, in my experience, taking profit as quick as I can is usually the best way to go about it. So we chop around, all right? But you can see PayPal, it was consolidating, and then boom, we got one push, pull back, and then it just never looked back. Now, I'll show you guys where I sold. So I had, you know, I had a bunch of contracts I was holding on to, and I sold at 1039. Yeah, 1039. I sold at 310. So I didn't lose any money on any of the contracts, right? But because I had scaled in, I had an average price, I think, of like 260, I think is what it was. And I sold on this candle right there, okay? I'll actually just, let me see here. Just so you guys can see this visually. Let me, so I took profits right there, right? I'm like 23% up in my account, which is absolutely amazing. I've doubled my account this week. I made like, I don't know, $2,300 this week. And so that was a pretty good profit. I had to take it. I got out. You know, in hindsight, it ran a lot further, right? It's still running right now. You know, I mean, in hindsight now, my contracts, like if I go to, I had the 290 calls. I sold them for 310. Or the 295 calls, I'm sorry. I sold them for 310. They're now worth anywhere between about $450 and $500. You know, so in hindsight, I missed out on money, right? But you can't think like that when you trade. I sold pretty much at my target. Like we had supply here at 298. So, you know, I sold a little bit before that, and that's usually how I like to trade. The guys that I follow, like Carmine Rosado, you know, they always say, you know, to sell when other people are buying. And that's exactly what I try to do. We were over the high of day, right? Because we had some resistance here, and I was not going to let this trade turn against me, right? So in hindsight, I could have made twice or three times as much money. Maybe that could be seen as an opportunity cost that I'm taking. But I took profits, right? My account is $2,300. 23% up. I made about $2,300 or $2,400 this week. I practically more than doubled my account this week. I had $2,000 in the account starting on Monday, and you know, now I have over $4,400. So I think it was a good trade. This is the kind of stuff you want to look for: consolidation, you know, with a general move to the upside. You know, try to scale in and then just take profit. Obviously not financial advice, but that's advice for trading, okay? I think I can give trading advice, right? So it is what it is. We hit over $300. We're at $300.08 right now, or 5 cents. And, you know, PayPal is rocking and rolling. I know the price target got moved up to, I think, 342 is the price target the banks are giving it. So we'll see what happens. But I trade PayPal every single day. I've been making lots of money trading, you know, this run right here. I like scalping. I like day trading, getting in and out as quick as I can. And, you know, it is what it is. And like I always say, too, you know, with trading, pick a couple of names that you're going to follow, maybe 2 or 3. For me, it's PayPal, Square, Boeing. Sometimes I trade the SPY. I have been following oil and trying to help my brother trade the oil equity, ExxonMobil. But pick a handful of stocks, you know, to chase these gap ups on different stocks every single day of the week, or, you know, chase some bull run on a, you know, new ticker symbol every single day. To me, it just didn't work, right? I have to follow a few different names, become extremely familiar with them. I'm very familiar with PayPal. I feel very comfortable trading PayPal. I know where the supply zones are, the demand zones are. I'm charting these out before I take the trades. I'm planning the trades, planning the levels where I want to be active, and then I'm taking the trade. The thing I need to work on is, you know, taking my stop losses, respecting my stop losses, and keeping my losses, you know, incredibly smaller than my wins, because you know, that's just sort of where I'm struggling personally, because, you know, it's an ego thing. You have to admit that you're wrong. You have to admit that, okay, you know, I was wrong about this stock, or at least I was wrong for today about this stock, and that's hard to do. I think it's a psychological issue, you know, but technically, as far as my skill, you know, I think I've greatly improved. It's taken me well over a year to you know, kind of get to this level where, You know, I made $600 on Monday, $650 on Tuesday, $400 yesterday, $700 today, or not Monday, right? The trading week started on Tuesday, but you know what I'm saying. 6, 6, 4, 7. So, you know, most of my issues I think are actually psychological. You know, as far as taking my stop losses, the losing trades, sizing up too much, right? A lot of that is just psychological issues that I have to work through. Now, the only thing I wanted to talk about here, I mean, we've got some news, some pretty big news actually, which is Wells Fargo is canceling all lines of personal credit. And what's really interesting about this, you know, it kind of does look like maybe stuff that happened leading up to the 2008 financial crisis. But they've shut down credit lines right when people are going to have to start paying their mortgages, are going to have to start paying their rent. And I'm not exactly sure like how much line of credit people would have if, you know, they're you know, paying rent. But it seems like the moratorium on rent and mortgages is about to be up, and now Wells Fargo and some of the banks might be, you know, closing those lines of credit. So far it's just Wells Fargo, but are we going to see Bank of America or Citibank, other banks kind of join in here? We do know that Wells Fargo has some financial issues. They had a big scandal a couple of years ago where, you know, they were creating fake accounts for people. But, you know, I was watching the reaction. The reaction in the banking sector is actually bullish. This news is bullish for the banking sector. And so, you know, you have the repo facility, right? They have about $1.4 trillion that, you know, banks are keeping their money there because it's safer, even though it's only like 0.5%, it's like 0.5% in interest. It looks like Wells Fargo would rather get a 0.5% interest than loan money out to the American people and make, you know, 10 times more money. So that's kind of what's concerning here. This is what it's telling us. What this means is that Wells Fargo doesn't want to loan to the American people. They don't feel like they're going to get paid back. They don't feel like it's safe. So they're worried, right? Wells Fargo is worried. We're really going to have to watch the banking sector and see if we see more of this stuff going into you know, the next couple of weeks. Couple other things I wrote down here. You know, the banks, they know what's going on. Even Goldman Sachs says that oil will be hitting well over $100 a barrel sometime this year. Some people think it's going to be within the next few weeks or so if we do have supply constraints. The thing about the oil and the news that OPEC canceled their production output policy meeting is that we could have the oil producing nations start putting, you know, just independently putting more oil up online in the supply chains. And if that happens, that could have a bearish effect on the price of oil. But if that doesn't happen and we see supply constraints, they're not going to be, you know, they don't agree anytime soon on the 2 million plus more barrels a day, you could see oil skyrocket to $100 a barrel because of the supply constraints. We have food shortages that are definitely going to be getting worse, right? In the Midwest and California, it's a drought. The farmers, there's farmers that will be failing right now. There's crops that are dying, that are just baking in the sun. And this is pretty serious. Food prices are going to go up because of this. We're going to be looking at the inflation numbers this month. All right, we've got the CPI and the Consumer Price Index, and then there's the Consumer Expenditures, or the Price Expenditures Index. There's two of them, and so we need to watch those numbers. We need to watch the jobless claims as well, because those rose yesterday from a week before. And you know, what are the other banks deciding to do? You know, because Wells Fargo, I think last year they were from what I read, they were the bank that was giving out the most auto loans. They were providing the most auto loans, and so they were one of the largest providers for that. You know, is it possible that we're going to see more inflation? Is it possible we're going to go into stagflation? There's different opinions out there, you know, because that could be a concern as well, because you know, the economic growth has been kind of lukewarm, and it's definitely not all the hype that they're trying to get us to believe. But all of that being said, it's important to take to keep your eyes on the ball, keep our eyes on the macroeconomic environment. I know we get kind of, we kind of zone out in the things that we're involved in. Maybe it's your stock portfolio, maybe it's your silver stacking, maybe it's the day trading. But zooming out and trying to see the whole picture, that is definitely going to help all of us kind of navigate our way through this. What I think is going to be a huge, economic collapse. I think it's happening right now. I think 10 years from now, 20 years from now, these times are going to be written about and talked about like 2005 is talked about, like 2006, 2007, leading up to the 2008 crash. There's different opinions about the housing market, right? It's definitely a different, different landscape. The bull case for the housing market is that you've got equity is higher than it was in 2008. Also, down payments are higher, credit scores are higher, and the general rules have really been tightened up a lot since 2008. But the bear case is that they're essentially still selling those, consolidated debt obligation contracts, right? They've sort of renamed them, repackaged them, and renamed them. But they're selling a similar product to what they were dumping on the markets back in 2008 that caused the whole thing to go under. So that being said, let me know, where are you putting your money? What's on your watch list? What are you following? Do you have any questions about my trading strategy? Do you have any suggestions? I'd love to hear back from you guys. Comment down below. I hope you guys enjoy the rest of your weekend. I will be posting a coin roll hunting video probably tonight. I'll probably just go ahead and post it tonight for Friday. It's about an hour long, but I go through like 20 rolls of pennies, I think 10 rolls of nickels, a couple rolls of quarters, and it was a lot of fun. So definitely look out for that later on this evening. Big shout out and thank you to everyone supporting the channel on Patreon or following me on Twitter. In whatever way you're supporting, I appreciate it very much. And with that, as always, until next time, God bless.